Hello, guys. Welcome back to the channel. It's your boy E, Dividend Passport Bro, with another video. As you guys can see, the channel is doing good. Um, I don't even know what else to say. The channel is doing good. We're at 976 subscribers. Um, it seemed like every time I would get on the computer and check things, we done went up another subscriber or two, or three or four. So thanks for the subscribers, guys. Like one thing I always say, if you guys gonna subscribe to the channel, make sure you watch the videos. I know I have a lot of videos on this channel that I've posted in the last month. So I know people are still catching up on some of the videos, but I appreciate you guys you know, for supporting the channel and subscribing to the channel. Like, share the content, and leave your comments. Okay, comments are appreciated. So I always try to know people watching the content that they appreciate the content. That if I'm doing something wrong or you guys see somewhere what I can improve, let me know. Like I always say, this is not financial advice. This is all based on my experience and on how things are with my portfolios. And of course, it's another day, and you know, I always stress this when I talk about the channel, is for you guys to always do what is best for you. This is what working for me now. I have talked about how I got to this point as far as me investing in a higher yield dividend, like the yield max, the round hill, the Defiance, and all of those different companies. So do what works for you. At this time, this worked for me. The portfolio is doing good. It's doing actually the portfolio is on fire. Today was kind of a red day in the market, but after hours, um, you know S&P is up after hours. The Dow is down, but I think we'll find out tomorrow if S&P beat us or we beat the S&P. We try to be, if not right at the S&P, we try to be above it at the S&P 500. This is what we use as a benchmark for this portfolio. So guys, you can see this sucker here is pretty much red. We got a few green here and there in different sectors and stuff like that, but it's pretty much red. So, when we down on a day like this, it's not down enough for me to buy a lot of stuff. I did buy some stuff in one of my other portfolios, but let's get to the portfolio. As you can see, we're down $917, 0.77%. And then yesterday, of course, we beat the S&P yesterday. We did a 1.16%, and it did 0.25%. So we beat the S&P yesterday, and we've been doing that pretty much. Every time I talked about that, we've been doing that. So I didn't buy nothing. We got some dividend reinvestment, but that's okay. I'm not gonna go into that. We'll get to the next portfolio. I'm trying to keep these video short because I can just start rambling and talking about all kind of other stuff. So as you can see, today we're down over here too. We're down 0.34%. And then overall we're down 0.57%. This is not exact, because the reason why this is like this, because if you look at the gains, right, the overall gains for the portfolio kind of change the balance. Because if you go back over here, like here, I'm down 900, 200, 300. But the overall gains, right? So they look at what the overall gains is and what the negative is. So they come up with this number. So sometimes, like I said, these numbers, how they calculate stuff. But if you count what the gain is minus what I'm down, is what this number is. Okay, so like I said, I'm down a little bit more than that. But if you add the gains for what I made income, or what the portfolio, the different stocks or ETFs went up, it looks like I'm not down by much, which I'm not down by much because they're doing it overall, not just per stock or per ETF basis. Okay, guys. So I'm just wanting to make that clear. So you can be like, oh, why do you let stuff look like it is, but you down more money? Okay, so what? You know, this is to give you guys an idea of what's going on, how the portfolio is doing, for you guys to understand. Like I said, this is my higher risk portfolio. The only thing I got in here that's under 5%, I think, is SCHD. Everything else is higher yield, as you guys can see from here, right? Um, O is 5. I got MO. Mo is 8. And where is SCHD? I know I didn't sell that. It's got to be here somewhere. It might be at the bottom over here. And that's 3.88%. I thought it was 4%, but that tell you how much I've been paying attention lately. You guys know I got a short attention span. So I didn't buy anything over here. We got some dividend reinvestment that came in, that put money back into the portfolio, and that was automatically repurchased. So finally, guys, I was able to use my portfolio in E-Trade, right? So finally, they were able to go back after almost a month, right? They were able to go back. They deducted almost, it's like $100-something from my account for some fees. I don't even know what that was, but I'm not even gonna call right now because if I call, I'm gonna be on the phone for a long time, and it's long distance for me because I'm overseas. Even though I have the international plan, but sometimes when I get back home, um, I still have $100-something bill instead of my regular $80-90 a month bill, right? It'd be like 130, 145. So I got, I already made like multiple calls to them. I was on the phone for over 20 minutes. So I don't know what that bill gonna look like. But it's all business expense, so I'm not really worried about it. It's on my business phone plan, so it's all good. So right now I got my buying power is 31 cents. I bought Coney, I bought NVD, I bought Tesla, Alti, and YMAX. Um, Now I don't know if I can do what you call it, fractional share on here. Um, but I would need to call whenever I call them back to find out about the money that it took out, what exactly it took out the money for. I have another account on here that I need to close out. I don't just have an extra account, even though and they have some money in there that I need to move over, but they need to close it out. So I think it's like $10. So once I talk to them, I want to wait probably till next month when I get back to Atlanta, and do that because I'm not pressing for a few dollars. I mean, whatever they did, they probably did the right thing. Like I said, I haven't used this portfolio for a long time, so since I have it, I might as well get into it. And so I bought a few things at the end of the day when I finally checked it. And as you can see, we are down today. This is stuff that was down originally like $12 and something, right? These two right here. I didn't want to show all that. Let me click back. These two right here, I've been down like $12 and something. But today, what I bought is 6 cents here, is 4 cents there, and it's 3 cents here. So I mean, I'm not too far behind the 8 ball as far as being down for the day on this portfolio. But I like to daily cost average. So when it start to get a gap between there, I'm gonna buy more. I'm gonna try to put a couple $100 into this portfolio every month, and let it reinvest. I might pull money from my other account to reinvest here instead of taking my own cash money. I might pull money from the dividend from the other account and put it in here, and then I might be able to do more. I might be able to do more because this account, it have margins right now, but I'm gonna take the margin off. Well, no, I'm gonna leave margins on that because I'm not buying nothing in here that have lower yield. These two things here, they've been there for maybe 2 years. So I need to take that off. I need to take that off, and I need to sell those. But I need to look at where I put them in at, and then if they're the same as when I bought it, I mean, they're still paying dividend, so it don't matter. I get a few cents every day, every month from them, right? And this is like what they've been selling. They've been selling some of my positions, right, to pay my bills with the E-Tray. So I need to go back and see. This is from 2023, 2022. So I had this for, like I said, I had this for a while. All right, so I had this for a while. This is from 2022, right? So they've been selling a little bit to pay my little bills I had with them. And what it looks like, but I haven't used this in a while. I just bought this and forgot about it. Um, it's one of those things I'm bad at. So that's why I like to log into things every day and check them, because if I don't, then I'll forget about it, and then the money just sit there, and then I get to owe money while I don't even know what I owe. So over here, everything looks good here. I did send some money over here yesterday. Oof, I'm showing that thing. I did send some money over here yesterday, and as you can see, it's $200.98. So I need to balance this portfolio out. When I say balance it out, I need to buy the other positions to complete this this portfolio, and then after that, I'm just gonna let it sit on drip until my ETFs. And as you can see, Ethereum is up to 3,000. No, sorry, it's up to 2,500. It went down. It was up a little bit. It went down. This is what I have in Ethereum, and then Bitcoin is up to 63,000. So, like I said, I'm not selling none of these right now until they get to where I need them to be. Even though I'm not going to lose any money if I sell now, but I mean, whatever money I need to make, I'm making, and I have 4 years to get this account to 100,000, 100,000 a year to pay this girl tuition. So it's no rush. It's no rush. I mean, I already added some money into the account, so we're gonna continue to do that gradually. Then this is from my personal bank account. This is not coming from nothing. This is not from another account. This is from my personal account. So this is my own money. This is not money paid back as dividend that I took to buy this. And then for the overall, right? For the overall, and I was playing around with this earlier today. We did go down in dividend a little bit, right? We went down in dividend a little bit. Now, usually when this happens is companies cut dividends. I have a lot of companies, right? So it's like 147 companies that pay me dividend every month or every quarter. Breaking down. Some pay monthly. Now I got some weekly. I got a couple of weeklies in there, and then quarterly. So some of the companies will cut dividend for whatever reason, and of course, for the ones that have cut dividend, I don't see the need to get rid of the position. Because it's not by much, so I'm going to continue to hold on to those positions, even though they cut dividend. But it's not, like I said, it's not that much, so it's not a big cut, right? I get the notification every day on who's cutting and who's not cutting and all these different things. So I'm happy with that for now. As you guys know, I sold a lot of things to get out of certain positions, so now I got that money I need to buy. But of course, I'm waiting for the market. I'm waiting on red days, and I thought today was going to go red for a lot of things that I wanted to buy, but it didn't go that way. So what I wanted to buy wasn't red enough for me to buy, right? It was still, because the market been up, so even though it went down, but it was still above my cost. So that means, when I say above my cost, that means what I paid for it to where it was down to. It wasn't that much. It wasn't that big of a difference, right? So it's like a few pennies here and there. I know that make a big difference when you have a 1,000 something shares or whatever, but still, it's not that much big of a deal. So I'm going to wait and see what's going to happen. Now, if the market continue to go up, then of course I'm not going to get to 10K this month, this year, right? If the market continues to stay green, I'm not going to go to 10K because I don't want to just buy something and then in January, boom, it go back down. So the goal is to get to 10K with these both portfolios. But if I don't get to 10K, I mean there's a reason for that because I'm waiting for the market to go down. I'd really do buy when the market go down, especially when I have money. And this is money of margin, so it don't make no sense for me to be buying stuff when the market is growing, and then later on it goes down, and then you got that big gap. So I like to buy when the market is red. Okay, guys. So like I said, we down a little bit in dividend, but still, I mean, it's a few bucks here and there. It's not that big of a deal. It adds up in the end, but it's not that big of a deal, right? So we look at incoming dividend, add S to it, right? And you can see we almost at a 9,000 in the high, right? And then the low, $7,240. I mean, that's okay. And then on average across the board, if you average them out, it's like 8,500. So on average, if you just say, okay, look at all those highs and the lows, on average, $8,500 and $96 a month. I mean, that's a lot of money. That's a lot of money. And I'm grateful to be at this point. But of course, I mean, I'm not satisfied because I want more. Because of everything I'm trying to do. And, sometimes, like I say, I buy more, right? And then I'm going to take that more when I get to the point, when I get to the point where I say, okay, it's enough, then I can start back investing into my growth stock, right? Into my growth, not dividend growth, but into my growth stock, right? These are stocks that don't pay dividend. And I can start reinvesting into that. Now, at some point, once I pay off the margins, then I will go back and start investing into XCHD and all the other positions that I have that pay the 1%, 2%, 3% yield that was paying me 20 some thousand before I started investing into the high yield dividend. So, my goal is still there. I'm a dividend investor, even though I'm now investing in higher yield, but I'm still a dividend investor. It's more right now that I'm getting to that retirement age and I want to early retire. Of course, income is more important because I'm trying to use the money now. I don't want to wait another 10 years to say, okay, I can use the money. No, that's too long. I need to be able to use that money now and be comfortable. So even if I have to stay in the U.S. or spend time in the U.S., because I got properties there, I got investments there, and if I'm not working, I have enough money that will sustain me in the U.S. and sustain me anywhere else I want to be. That's the more important thing, right? And I'm used to being by myself anyway, so it's not like I'm hanging out with my boys all the time. So it's not like, oh well, you're gonna be bored of your people at work. No, this is what I do. I'm on the computer all day. If I'm not working, I'm doing my own thing. So it's not like, oh well, you know what, I'm gonna be bored because my friends at work. No, I barely see them suckers now because they're at work. They got their family doing their own thing. So of course we gotta do our own thing. We could be waiting for people. All right, guys. So let's go to my favorite tab right here. Okay, this is my favorite tab. And of course it shows the same amount from the dashboard back here. But we down too at the 10-year mark, right? We're still down. So if we say, I'm gonna drop this sucker back to 5 years, right? In 5 years, I mean, it's still gonna be generating $275,000. That's a lot of money. That is a lot of money, and I would be a millionaire at that point, right? I'll be a millionaire at that point. So of course, I am not tripping. What I gotta be worried about if I'm gonna be a millionaire? Not a damn thing. Because, and not only just a millionaire, I'm gonna be a liquid millionaire. And I know, God willing, this is gonna happen before that time. I'm getting pings and stuff coming in from work. So I was just looking at it on the phone. But God willing, this is gonna happen. I'm gonna be a millionaire before, 2028. Probably, if not this year, it's gonna be 2025. Maybe by the middle of the year. God willing, that's gonna happen. But by 2028, I'll be a liquid millionaire. Yeah, that means my portfolio. Well, it's gonna happen before 2028 because this portfolio does not include the 100,000 that I have in crypto. This portfolio does not include the 20 some thousand that I have in growth. This two portfolio does not include the 90 something thousand that I have in my Roth, my retirement account. It doesn't include my 401k. I don't add those, right? And it does not include my Robinhood or my E-Trade account. They only have M1. Only M1 is in this thing right here. And M1 barely generates about $200 a year, whatever, if that, right? So, but it's every little bit count. So that's not that. And these are all income streams, right? Different things, different income streams. So, and what I'm gonna do, even though I bought similar positions that I have in other things, but I'm gonna add a couple of other positions to my E-Trade that I don't have in the other account, right? Um, like other things that I want to buy. So to help kind of balance it out. And I mean, if it works out, it works out. If it don't works out, it's a try and error. It's a new account, it's a small account, so I can play around with it. Um, Compared to my bigger accounts, to where you know I've been buying in for 4 years now, almost 4 years, right? I forget. I mean, I started doing this back in December of 2019, so it's not December yet, so it's still under 4 years, right? So I mean, going on 5. I would say going on 5 because that's the timeline I give myself mentally. That's what I see. It's like almost 5 years. But I mean, I've been doing this. I'm investing in lower yield, mid high yield to now. Even the high yield, I've been investing in high yield, but not to this point. What I'm putting $25,000, $30,000 in one stock or one ETF. No, I wasn't doing that. I was putting in maybe $1,000 or $2,000 and then getting $500, $600 a year. Um, so now what I'm doing it a lot crazy. But like I said, don't do what I do. Do what I say. We should start safe, start investing in the safer funds, safer ETFs, get comfortable, trust your process, and understand that, hey, it's risky, of course, it's risky, but trust the process and don't get ahead of yourself, right? Don't get ahead of yourself because I don't want you to lose your money and you blame me because no, I want you to not get ahead of yourself. Take your time, learn this thing right. And I, like I said, I use tools, right? Seeking Alpha, stock analysis, market watch. I mean, some of the things I use, even the track your dividend, it's okay. But I'm building my own dividend tracker that's gonna have things in it as really needed, other than just seeing your income. So I don't know when that's gonna be on, but whenever you guys see it, you're gonna know. Now it's not gonna be called the Dividend Passport Bro Tracker. No, that's not the name we're gonna go for. It's gonna be something more standardized, that fit the masses, right? That anybody that invests in dividend can use, not just for me. And that's going to come with a price. Okay, it's not going to be expensive as the most expensive dividend tools out there, and it's not going to be as cheap as the cheapest dividend tool out there either. It's going to be probably cost a little bit more than this one I'm using because it's going to be better than this, I think. And then it's going to provide a little bit more detail that you don't get right now with this dividend tracker. Okay, guys. So, like I always say, happy investing, invest in your future. Subscribe to the channel. I love you guys. We kicking butt, right? We kicking butt. The channel is doing awesome, and it's all due to the support from you guys who watch the channel, who share the content, and the emails you guys send me every day. Sometimes it overwhelms me when I open up my email and I see people telling me, hey, Edwin, it's only been a short time since we had a conversation, but, I can see the difference, how I pay attention to my finance, and the way you show me how to access different things, to look at these different ETFs, to be able to start investing. And, the best place to do that $1 a day investment is Robinhood. It's very easy to use Robinhood. It's the easiest. When you get comfortable, you can upgrade to something like a Fidelity or the bigger name. But it's always better to start with the easy stuff, so you can get, just so you can start. And once you start and you get comfortable, and believe me, like I tell people all the time, if you do this stuff in buy, like I always tell people, buy a little bit every day. Even if the market is red, down, up, down, it doesn't matter. Your first month, if you're buying every day, spending $1 for each of your positions, if you can do that for 1 month consistently, but 3 weeks consistently, by the fourth month, by the fourth week, if you can't just do this on your own with not even thinking about it, then something wrong with you. And this is true, because it's that consistency. It makes it easy for you to just buy the stock. It makes it easy to get up in the morning, check your account. Like I say, in the morning, check it at lunch, and check it at the end of the day, because it's your money. Okay, it's your money, and you need to know if you get a chance to add to your money because the market is down, you need to go and buy. Period. And this is when you invest in the good stuff. When you invest in the risky stuff, I mean, then you gotta be able to take it when the market go up and down, because it will go up and down. Yeah, you don't know when it's gonna. It can be a little news or a little whatever, and it make the market drop, 2-3%. So that's all I gotta say for today, guys. I love you guys. Happy investing. Peace.